Welcome to episode 1 of Bankruptcy Bingo. Who do you have for your next pick? Is it Credit Suisse, Morgan Stanley, Goldman Sachs, or do you have another pick in mind? What is going on, guys? Lottie Stocks here. Welcome back to the channel. Welcome to the channel. If you're new, stay till the end of the video so you don't have to watch another update video here on YouTube. We are going to update you on everything that there is to update you on. All I ask you guys to do is hit the like button, hit the subscribe button. Let's get into the video. Now, I hope you liked the intro with Bankruptcy Bingo because First Republic Bank crashed 35% on the open as they announced exploring strategic options, including a sale. Here we go again. Now, just to give some little disclosures, I bought puts a little bit late on Credit Suisse last night. I lost a 50% gain or so on those options. I cut my losses. However, the way the chart played out, this looks like a solid time to buy calls for FRC. Not financial advice. I'm not a financial advisor. Very temporarily. In no way, shape, or form do I think banks are going to rebound. However, the stock price is just in a position for a slight rebound the same way Credit Suisse was. So if I could make that trade again, I would grab calls. However, the premium is a bit too high and it's all up to your risk reward. Following that up, the former head of Wells Fargo Retail Bank, Carey, must pay $17 million and faces up to 16 months in prison as from 2002 to 2016 at WFC. Her and other employees reportedly opened millions of accounts and they were opened without customer approval. Now that we got a little bit of the bankruptcy bingo out of the way, we're going to touch more on it later on in the video, but AMC's chart is looking decent right now. We're trading at $4.39, up 4% on the day, only because the SPY is going green, which we are going to talk about in a second. However, we got the bounce right exactly where I said AMC was going to get that bounce. This is the respected trend line all the way from way back when retail jumped in the stock at $1.91. This is the most respected trend line that I think AMC has to respect. And not only that, these gaps usually don't have to get filled because this was technically a runaway gap, but this gap did get filled all the way down to about $4.04. So AMC is looking solid. It filled the gap, it bounced off of this trend line. In my opinion, I'm just watching for a break over about $5.15 to see what AMC is going to do next. Now, everything is delayed. The conversion is delayed. The reverse split is delayed, all because of the Allegheny lawsuit, which is in motion to hopefully get dismissed. And right after dismissal, APE and AMC will end up doing the conversion. However, a lot of people are talking about how Anterra sold a ton of their APE. They disposed of a bunch of APE. You might be asking why. It's been pretty consistent that shares available to borrow to spike before the filing of Anterra's sale is made public. Who did Anterra sell to lend the shares? Why didn't these shares show up in today's volume? APE's dark pool volume was 23 million. Not there either. This was a sale, not a TRS. Now, in my opinion, Anterra's only purpose was to forcefully make the vote go towards yes with all of the shares that they were sold. They had no intention in profiting off of holding APE long term or holding AMC long term or essentially just investing in the company. They were kind of just this counterparty that said, you know what? We'll grab these shares just so your favor goes for the vote, so it looks like you have power, because again, it was that power/control thing that Adam Aron did way back when he revoked the vote. He did not want to look weak and show that shareholders had all the power of the company, even though we should. Now, touching on some Ortex numbers for AMC and APE real quick, 24.1% short interest. Utilization is maxed out. The cost to borrow risen 318 for an average, so shorts are paying 3 times their position and a max at 358%. As for APE, 6.53% short interest, utilization almost at 84%, and the cost to borrow not being reported. Again, when they convert, APE shorts do have to close their position, aka buy the stock to cover. As for GameStop, GameStop is tough because it did not respect its overall trend line from back in January like AMC is doing. However, as of now, the only common cycle that it looks like GameStop could be playing in if the January of 2021 is invalidated is this little part right here, which leads me to think that GameStop could have another 10% sell-off and bounce off of 14, and it could be a very, very, very hard bounce. So I'm looking to see GameStop break a little lower. It may not be the case, but once it does break a little lower, I'm going to load myself up on calls personally because I don't think there's much room for downside. And again, I'm going to give myself enough time. If you want to know my trades, the Discord is linked down below. I let you guys know my trades in Discord right away. Biden administration is demanding that TikTok's Chinese owners sell their stake in the video sharing app or face a possible US ban of the app. Now, a lot of stuff is happening with US, Russia, China spying on each other and just essentially conflict in general, and hopefully this does not spike war. Hopefully this does not spark war, because that is what it's looking like going forward, which is essentially not going to be good for the SPY. Now you might be asking, why is the SPY ripping? Why is the SPY green today? I personally expected it to go red today off of the move that happened yesterday and off of the news with the banks. And even on this, investors are freaking out right now. US Treasury yields plummet an insane 80 BPS over the last 2 days. Biggest drop in yield since 1987 flash crash. Bigger than what happened after 9/11 and Lehman Brothers. Is a market collapse coming? You see all of these factors playing in, and then you see the S&P 500, or ticker symbol SPY, up 1.27%, trading at $394.22 as I'm making this video. In my opinion, I see the SPY coming up to about $394.50, $395.50 actually, before getting rejected. And the only reason I say that is because this is in what was a demand zone, and then it broke essentially below it, and I thought it was going to act as a supply zone. It got dipped further, and essentially this is just a major decision zone for the SPY, right? This level between 387 and 395 is a huge zone for the SPY to pick where it wants to go, and I think if it breaks above that 395.50 level, it's not going to hang out above that for too long, and if it does, it's going to get rejected off of this overall ascending parallel channel that we have drawn out at $398. That is my outlook on the S&P 500. Now, just in, $2 trillion could be injected into the U.S. banking system by the Federal Reserve's emergency loan program, according to JP Morgan. So it looks like another bailout is coming. Plus, Bank of America has gotten more than $15 billion in new deposits since the collapse of Silicon Valley Bank. A lot of people are just switching banks, switching banks, switching banks. People are going to see that Credit Suisse isn't a problem. They're going to switch banks, and then essentially they're going to eventually, potentially, damn, I'm actually making a rap here, see that Bank of America might be in trouble. Then they're going to switch banks, and they're going to switch banks again until these banks just essentially get flooded, and the bank runs keep occurring. Now, the European Central Bank tells ministers some EU banks could be vulnerable. And following that up, investors have built a $16 billion bearish bet on Europe's banks. You guys let me know what you think in the comments down below. Plus, Credit Suisse, 5 years, just hit 983 BPS, up 102%, or 498.68 BPS. Every single video this is going up, and this is shown to you guys. They are in a bad position. Credit Suisse is now to borrow $54 billion from Swiss National Bank to shore up liquidity, which is ironic because the Swiss National Bank is not in the best spot, as they reported an annual loss of $141.54 billion, which is the largest loss in the central bank's 115-year history. On top of that, guess who owns 1.2 million shares of AMC? The Swiss National Bank. Guess who gave AMC a sell rating all the way down to 95 cents? Credit Suisse. These situations just get more and more ironic as we go. Finally, to close out the video, Bed Bath & Beyond. RC Ventures files motion to dismiss bogus allegations in Bed Bath & Beyond and securities litigation. You guys let me know if you're in Bed Bath & Beyond going forward. I know a few people in Discord are as well. Shout out to Lawrence if you're watching this video. But overall, guys, this is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to get 17 free stocks for just signing up and depositing in Moomoo. That link will be under the video. It's 2 minutes to do so. And also pop in the Discord. Do not sleep in the Discord. A ton of you guys are flooding in there. We have the best community in there as well, where we talk stocks, post gains, post losses, access to option trading alerts, and more. Make sure to essentially pop in there as well. Now, guys, we are just waiting for this lawsuit to get dismissed. Hopefully you enjoyed the video. Have post notifications on in case I upload a YouTube short or a post or just another video to update you guys. I love you all. Lottery Stocks out.